Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. We are doing, Rob and I of the Mindfull Investor are doing another podcast for you guys. Today, the topic is options. So, stock options, and we're going to try to give you a little bit of a background, and then each of us has a different way of how we work with options and how we make money off of options. So we're going to go through that and introduce everybody. So here's Rob.
Yep. Hi, Alesh. Thanks for having me again.
Now, the other thing is, Rob has been doing this for longer than I have. I've been doing this since June, so about 9 months as of time of taping, and I've only been selling, mostly puts, but I sold a few calls as well, all covered. But Rob has actually purchased options as well, so he's a little bit ahead of me. But so we were both gonna kind of talk about what we do and kind of the tools that we use. I think so. Rob, can I start kind of what I do?
Yep. Go ahead.
Okay. So uh, let me kind of say first of all that I only want to be dealing with stocks that I would want to hold. So if I'm going to be selling a put, I've done that most of the time. So strike the stock price is here, and I'm going to sell a put down here, which means that I'm saying, okay, I'm going to get my premium right now at the time of sale. If the stock price goes up, I don't get the stock, which if I wanted it, I miss out on that. Uh, what I have done, if I really like the stock, I bought some shares here, and I've also sold puts. So if the stock price went down, I also got to get the stock that way. And if I want the shares, I want the stock price to go down and ideally be probably a penny above the strike price, because then the option expires worthless and I can just buy the stock outright for my 6.95 commission. Because if the stock goes down below the strike price, yes, I get the stock. I have to pay this, even though the stock is worth here. But also, my brokerage charges me some hefty commissions for exercising that option, or that option being exercised on me. So ideally, my ideal scenario is for it to be here. If I want the stock, I don't mind if it's down here, but so that's my selling puts. And so I do my research first, and I'm not going to go through all of it. I check what's the price to earnings, what's the dividend, is the dividend supported, what are the financials, are the is the income going up, is the profit going up. So I check all of that. Now let me share my screen then. I do have a very cool free tool, which is over here. So this is from Options Play. Back in June, I signed up for a free account. I'm not sure if that's still available. Other people haven't been able to get a free account, or they got like a demo version for a month. This is the Canadian version. All I can do is get Canadian stocks on here, but that's fine. I'm perfectly fine with that. Rob, have you done Canadian options, US options, both?
Yes.
You've done both?
Yes.
Okay. Uh, is liquidity the main difference between the two?
Yeah. I think I bought or sold these Canadian option contracts maybe just a handful of times, but the US is like thousands of times. So because like as you said, the liquidity is very thin, which makes like the bid and ask, the spread is just huge. So let's say the spread is 10%, right? So every time you buy, you're kind of losing 5%. And then when you sell the other way, you kind of lose 10%. So buying and selling, you lost like 15% already. Like just to keep it simplified. So that's why I mainly deal with options in US and Hong Kong markets.
Okay. Yeah. Uh, I've found the same thing. If you're looking at options for Royal Bank, then there is some liquidity because that's obviously a big popular company. But for some small companies, there is nobody buying, nobody selling. There are market makers, which are professionals who are sort of there to make money and they provide liquidity, but they don't provide. They're the only available buyer. So if I want to sell a put, uh, they won't give me a very good price. But of course, nobody knows what a good price would be because there's no frequent trading, so there are multiple opinions on it. And so what you end up doing is you end up selling the put by a limit order where you kind of start between the bid and the ask, and then you sort of inch your way down towards the bid. So over a course of a day, I'll change the price multiple times. And then of course the stock is moving as well. So if I'm trying to sell a put and the stock goes up, then the option becomes worth a little bit less. So I'm like, okay, this is going in the wrong direction. I should have done this in the morning, and I could have already sold it. But so you sort of sneak up on it until eventually, once you get close to the bid, the market maker will buy your put. But so going back to kind of the process, so this is options play, and it's really cool. There's no human opinion on this. It's all technical analysis, but it's just another bit of information. So left pane here is they have trade ideas where they have bullish and bearish stocks. So these are basically stocks which they think are, according to technical analysis, are going to go up or down. And Rob, do you use technical analysis in your options work?
Sometimes, but I don't pay too much weight on it because all this technical analysis, in my opinion, is like hindsight. So
Okay.
you can line up a lot of supports and resistance and all that, but who really cares? No one really has a crystal ball to tell the future, right? But that's all you can use about like the TA looking in hindsight. It's like hindsight bias. So like I don't know, you just find the bits that you want to see and then you go with that.
Fair enough. Fair enough. As I said, I do regular analysis, regular, checking the balance sheet, checking the income statement, looking at the business model. I definitely do that for stocks that I want to hold long term. Uh, as I said, I only sell puts on things that I wouldn't mind holding long term. And so the thing is, because the options, I usually sell something that's about 40 to 60 days out. And so uh, traditional analysis doesn't really apply in that short a time frame. And so technical analysis isn't horrible, just to kind of get another another look at it. But in any case, so for Canadian stocks, and so if you don't want to follow one of their calculated ideas, you can type in something in here. So I picked Savaria, which makes which makes basically lifts and stair lifts and so on for either disabled or older people. They make various equipment like that. So that's a bit of a boomernomics company, which I think won't do badly in the long run. And so then I kind of have a look here. So technical score. So this is just the strength compared to the TSX index. And then they sort of have the top row is 1 month, and then the bottom row is 6 months as far as what's going to happen. They also have it up here where they have 1 month trend is mildly bearish, so you can kind of see it going down, and then 6 month trend is bullish because it's trending upwards. They'll put in resistance and support lines. They also quote them for you here. Again, machine calculated. If I were to eyeball something, I'd be like, hey, isn't there a support line around 17? Maybe, yeah. Like I could see another one here. So
Yeah.
it's not perfect, and my inner artist comes out, and I use the left side of my brain. But what is really cool is that over here they give you suggestions on it's obviously options related. So they tell you about spreads or just buying a call and so on. Yellow isn't great. Red is bad. If it were over 100 score, it would be green. But so this is if you want to do a trade, if you're open to buying. So for example, they're saying, well, you could buy a call at 17, which is actually in the money because the call is here and the stock price is already here. Normally they're reversed. So you could buy one here because you're expecting the price to keep going up, and then it's going to become worth more and more as the price keeps going up. If I'm selling, I go to the income tab here, and so they ask you, do you own shares? Let's say no, and then it picks it picks one of them. Well, if I said yes, then it would be suggesting a covered call. If I say no, then it's a cash covered put. So I'm selling a put, and it basically says, well, we're gonna suggest at $16. So that's out of the money. It's $17.57 now. They're suggesting sell one at 16. It's going to have an annualized return of 5%, which in the dividend world, you're like, that's great. Where do I sign up? In the options world, where everything is multiplied and on steroids, 5% isn't that great annual. Now here's the probability of it expiring worthless. So that's actually a pretty good probability. So what I would do is I would maybe do my own calculations, and then what you can do is you can go in here and you can say modify, and maybe I feel better about 17. So then that gives me a much better price because the option price is higher because it's closer to being to the stock price than when it was down here. But now the probability of expiring worthless has dropped. And how they get this, how they calculate this is on the past movement of the stock, the historical volatility, and they make statistical calculations, and so they're able to come up with that. So let's say I stick with that, and now I'm going to click trade, and this is a very cool thing. So it kind of summarizes everything that you're doing, and then when you expand this, it tells you, and this is what Rob was talking about the bid and the ask being very large. So you would want to use a limit order like I described to kind of sneak up onto the bid. It tells you there's no earnings. So I don't know about you, Rob, but I have a difficulty determining when there's going to be an earnings release for stocks? Like usually the week before I can find that out, but I don't know
Um,
2 months ahead.
not
Where do
2 months
you?
ahead. Yeah, usually a month ahead, but then you can backtrack to like previous years. So approximately it would be like the second week of March or whatever. Then you kind
Okay.
of pay attention to their like the website and then just go into investors relations and then earnings calls and or announcements. Usually before 2 weeks, 2 weeks before.
Okay. Yeah,
Yeah.
like I usually have a couple of links that I click on a Sunday, and then it shows me everything that's going to be having uh, quarterly earnings releases that week. But what is good here is that they tell you there's not going to be any earnings. Now, why is that important? Well, earnings will create additional volatility in the stock because if the earnings are bad, if the news is bad, then the stock will drop. If it's good, it might go up. Um, After the couple of days after the earnings, then the stock becomes low volatility compared to what it was before the earnings. So knowing about earnings dates is important for those people dealing with options because volatility is one of the things that feeds into what the premium is. It talks to you about the annual return. So the one that I am getting is 12%. That's not great. I've had options which had over 100% annualized because they were quite volatile or what have you. The other thing that they kind of have a yellow warning on is that it has a 56% chance of expiring worthless. I like it to be around 70, 80 would be great. Remember, I want it to expire worthless 1 penny above the strike price of the option. So uh, I would want. I do like Savaria. I actually own them myself. I also like doing Savaria in a vampire like Savaria voice. So just for that, I get to own it. And so I wouldn't mind buying it at a cheaper price. It pays a decent dividend, and I think the business model is sound. So if I do sell this put at the $17 strike price, I want Savaria to go from 1757 to 1701, have the put expire worthless, and then buy it myself if I feel so inclined. So anyway, I like this tool. It's good for research and it sort of summarizes things. If I go and I look at the brokerage, uh, it doesn't have all these handy decision making support data. So yeah, I do look in here. I also read experts if I do want to hold this for a long term. So I also read the experts' opinions
Okay.
from BNN and so on.